In today's training, I will be walking you through how to model charitable trusts in the Voyant software. We're going to start by modeling a charitable unitrust, and I'm going to create a what-if plan to do this so that we can take a look at it against our client's current base plan. To give you an idea of what our client's current scenario is, let's take a look at their plan by clicking this down arrow. This is a client couple in their 50s. They have 3 high-value investment portfolios. One is $15 million, and this is going to be the investment portfolio that we're going to move into the trust. And so we're going to start by creating the what-if plan, and we're going to give this one a name. Create this plan, and once this what-if plan is created, you'll see the name of it in the top right corner, and I'm going to click the plus button and select trusts. And from the trust type drop down, I'm going to select Charitable Remainder Unitrusts. This is the one I want to start with, and my grantor is going to be William. He's going to be the one funding the trust, and we're going to give this a name. This is not an existing trust. This is going to be something we're proposing as an option to our clients. And if you have any questions about what any of these items are, just a reminder that anywhere you see one of these hyperlinks, that does mean that this is an item that has some inline help. So you can click on it and get a little bit more information about what that item does and how it affects the settings in your trust. Now, under term type, this is going to be where you can do a fixed term or a lifetime term on this trust. I'm going to do a fixed term in this example. I want the trust to term out in 20 years. And under the payment percentage, I'm going to adjust this to 4.5%. That is going to be the percentage that is paid out to the non-charitable beneficiary, and it's going to be based on the amount in the trust at the end of the year. That's going to be liquid assets. On the end of term, I'm going to select liquidate to donor advised funds. If you select liquidate, it's going to liquidate to a charitable beneficiary and simply exit the plan. And if you liquidate to a donor advised fund, it's going to ask you to link it to a donor advised fund that's already in the plan. So you would need to have one that's been already created in order to link it to the donor advised fund. So this is something that I've already created in the software so that I can link this. Now, under beneficiaries, I'm going to select my non-charitable beneficiary. That's going to be the spouse, Bianca, and she will be who receives these 4.5% payouts at the end of every year during the 20-year term. Now I'm going to click done to save. Now, really quickly, the next thing that we need to do is fund this trust. And in order to do that, we're going to have to go to transfers, and we're going to have to move funds into the trust. So under destination, transfer to, we're going to transfer to the trust, and we're going to transfer from the investment account that we want to use to fund this trust. You can do either a specific amount or you can do all available. In this case, I'm going to do all available. And then under timing, I am going to have this occur at plan start, and I'm going to set that as my start event. I'm going to click done to save. Now that we've funded the trust, we should see the payouts start to occur in year 2. That's based on the payout percentage that we entered. And those are going to be going to our non-charitable beneficiary, Bianca. So you can see this other income flowing into the plan in her cash flow. That first year, $712,000, and it's going to vary based on the assets in the trust each year. Now, if we go to year view, you can see in year 2, this is going to be listed as a trust payout from the CRUT to Bianca. Also, pointing out to you, if we go to taxes in year 1, after that trust has been funded, if you want to verify the tax advantages of funding the trust, you can go down here to federal taxable income, and you'll see that deduction from their taxable income in this section here. And you will also see the charitable cash donation carryover listed up here in the carryover summary. And then scrolling all the way down to the bottom, you'll see that there is a separate section here where we map out the taxation for the trust itself. And you can scroll over each year to see what's going on in that trust throughout every year. At the end of the 20-year term, those payments to the non-charitable beneficiary will end. And what we should expect to see is that at that end of term, in the investments section, that donor advised fund will be funded with the remainder of the assets in that trust. And that is what we're seeing here. So we're seeing that large contribution out of that charitable remainder trust into the donor advised fund. And that is where that money has gone. And you can see that here in the investment section. Next thing, let's do the Charitable Remainder Annuity Trust. And we can take a look at the differences between the two. So I'm going to go back to my base plan and I'm going to make another what if scenario based on this one. So we'll do a CRAT this time. I'm going to go again to my plus button in the bottom right hand corner and trusts. Under trust types, this time I'm going to select the Charitable Remainder Annuity Trust. My grantor again is going to be William, and we're going to give this a name. We're going to do a lifetime trust this time. So this will term out at the mortality of the non-charitable beneficiary. And then under amount, we'll just set out a payment amount that's going to go to that non-charitable beneficiary. So whatever that payment amount should be, this is what you're going to enter here, and that will be what goes to your non-charitable beneficiary. End of term, I'm going to select to simply liquidate to the charitable entity here, and then under beneficiaries I'm going to once again select Bianca. Clicking done to save. Let's go again to my plus button and we'll fund this trust. Selecting the CRAT, and we will fund it from that investment account, all available, doing timing, setting this as a start event and clicking done to save. I should now again be able to see those payments going all the way through to the end of the plan for $250,000 as a steady payment, all the way till the end of Bianca's mortality. And then if we want to see the differences between the outcomes of these different trust types, one way that you can do that is going to Overview and Legacy. And in here you can see the legacy for the outcome of the CRAT plan itself. So you can see the federal estate tax outcome on this version of the plan, and then the total wealth transfer after tax of the estate. And you can also do a comparison between different plans. So if you click on this comparison view, you can select the base plan and compare it against the plan with the CRAT. And you can see how the two compare against each other and what the total wealth transfer after tax is in either scenario. And you could also compare the two trust options against each other to determine which one would have a more advantageous outcome for your client. So this is just a brief overview at high level of how to demonstrate charitable trusts in the Voyant software. If you'd like some help walking through a specific case with one of our support members, please feel free to reach out to us at support@planwithvoyant.com, or you can always click the name of your client in the top right corner, request support, enter your question into the text box, and share client access, and we'd be happy to help. Thanks for listening.